The markets are crashing, and all we see now is stories of doom and gloom. But what if I told you that we are being set up for a once-in-a-lifetime opportunity? November 2025 is on track to be the worst month in recent stock market history. This is the heat map from yesterday, a sea of red, but then in the after hours everything picks up a bit, and this is happening almost every day recently. But behind the scenes, there is a much bigger story unfolding. Are we in an AI bubble, or are we getting ready for one of the biggest market rebounds to unfold? Dan Ives of Wedbush had this to say.
Recommitting to the AI trade, essentially saying that they're still enthusiastic about it. Why is the market in general not really giving them credit for it?
Look, first, I think that was a masterpiece quarter, right? And I think any worries about the AI bubble thrown out the window in terms of fundamentally, when you heard from Godfather of AI, Jensen NVIDIA, look, I think it speaks, and you've talked about a lot on the show, like worries about circular financing, like where this is going to go. Can the data centers going to get built? Is there capacity issues? Look, I just continue to view when you put the pieces together of the puzzle, as well as our 3 weeks in Asia, this is third inning, top of the third, one out of this AI game, and that's why I just think names like NVIDIA. Days like today, you buy names like Oracle, Microsoft, NVIDIA, because I believe this tech bull market has another 2 years left.
I mean, as a baseball numbers guy, we now know sometimes the third inning is your high leverage inning, where you got to kind of bring in the best arms and try to put down a threat. And I'm wondering right now if NVIDIA's numbers, and I've been kind of puzzling over this all day, as great as they are and as much confidence as Jensen has about the next 4 or 5 quarters, you wonder if everybody can have equal confidence in the customers that are giving him all that money and allowing him to earn those margins on their spend, and when they're going to sort of get clarity about the payback.
Look, it's a great point, but I would just say, look, in the U.S., 3% of companies have gone down the AI path. Europe, 0. You look at, in Asia, ex-China, minimal, less than 1%. Sovereigns, Middle East, just starting. I mean, my whole point is that, right now, demand to supply is 12-1 for NVIDIA chips. And of course, AMD and others are going to play. But the reality is that we are still early. I mean, you're talking more money is going to be spent in the next 2 to 3 years than the last 8, 10 years combined. So I get some of the worries, but I believe the bears will continue to watch this AI party from the outside looking in as they continue to prove it out. And I think Street's underestimating numbers anywhere from 15 to 20%.
Right.
Next to 12
but is that not the bull case for NVIDIA and the whole food chain for the infrastructure build out? Can it not also be the bear case for the Metas of the world and the Microsofts that feel like they're on this unending treadmill of having to spend, hoping that they get the return?
Yeah, and I do think it's a little more than hope, because the reality is that the use cases, if you almost put the pieces together, look at Palantir, look at MongoDB, look at Snowflake. So you see the use cases are exploding. Look, and it's an arms race that they are having to continue to spend on, and you're going to see the same with the Oracle. But I think Meta, we look out 12 to 18 months. This was a table pounder moment, just like we saw with Alphabet as a table pounder.
Well, I was going to get to Alphabet because that's a really fascinating situation, how it's gotten revalued higher, tremendous amount of sponsorship all of a sudden of this name that people really had a lot of skepticism about not that long ago. Now, their new model is getting raves, I guess, in terms of its performance, the new Gemini. And also, they did it, kind of with their own processors. So how does that play into the whole, NVIDIA at the center of this question?
Sure. Well, NVIDIA obviously fueling its centerpiece in terms of one chip in the world, but the reality is Alphabet, you go back 6, 8 months ago, New York City cab drivers bearish on it, right? So it's one, AI that is ultimately going to destruct the model. The opposites happen. I mean, I think now you see Sundar and what's happening at Google, they're on the offensive. I mean, you look at what they've done with Gemini, this is just the start, because the reality is in Cupertino for Apple, who are they going in for AI? It's just a matter of time until they do the Google Gemini deal as well.
Yeah.
So that's why you've seen that stock at continue re-rating. Bull case $400. My colleague Scott Devin and I, we've done a lot of work. Look, I believe this is one. This is a name you continue to own, just still early days.
And then when it comes to Apple, because you mentioned it's an arms race, well, they're not really participating, at least in terms of the gross dollars being funneled in that direction.
Yeah, I think yet. Yeah. I think now it comes down to, like, obviously iPhone 17's been almost a sleeper upgrade cycle. but you have the biggest install base in the world. Monetization is right now on the verge. 2.4 billion iOS devices, 1.5 billion iPhones. The consumer AI revolution will go through Apple and Cook, but it all comes down to Gemini. And now that DOJ, that has cleared, that gives them the opportunity to walk down the aisle and ultimately ink that partnership. We said that's worth $75 to $100 for Apple stock.
So Dan Ives believes that Wall Street is massively underestimating AI and believes this bull run will continue through 2028. Which brings me to this point. It's a very simple thing. So many people have been calling this AI-led market a bubble for the past 2 years, yet the market has gone up far more than anyone expected. But here is the thing, a crash will eventually come. That is almost certain. It has happened again and again throughout market history. But how high will it go before it crashes? That is something we don't know. Now, I've seen this online and it sums it up perfectly. The bottom of the next crash may be higher than where the market is today. So when you consider that Dan Ives believes the bull run will continue to 2028, and then consider just how much the market is up over the past 2 years, ask yourself the question, how much higher could it go by 2028? There is so much more money being invested in AI and AI infrastructure than at any other point. McKinsey estimates that capital investments to support AI-related data center capacity demand could range from $3 trillion up to $8 trillion by 2030. Earlier this year, the White House unveiled America's AI Action Plan. And at the start of the year, President Trump announced several AI investments, such as a $500 billion private sector investment in AI infrastructure. Now, the markets might be dropping for the past few weeks, but this week has been a huge week because of Nvidia's earnings report. And Nvidia just posted one of the best quarters ever to be seen. The company's third quarter revenue came in at $57 billion, up 62% year over year. Data center revenue reached $51.2 billion, up 66% year over year. That performance represented a significant acceleration from the second quarter's 56% revenue increase. And it's not just a revenue story. Nvidia is generating massive profits. Third quarter net income was $32 billion, which again is up 65% year over year. So what the heck is happening in the market right now? We are seeing extreme fear. The CNN Fear and Greed Index has dropped to one of its lowest in years. It briefly dropped lower in April, but then it surged back up again quickly as markets recovered extremely fast. Everyone remembers that huge drop in April, but few people seem to remember just how quickly it recovered. April actually finished in the green and went on a massive bull run all the way to November. So we could see something very similar happen again, because there is a few factors at play influencing the markets behind the scenes. Now, something that I seen yesterday was this. There has been a huge short-term liquidity squeeze. And when we look at the data and think about it, it makes perfect sense. SOFR, which is the overnight borrowing rate for major institutions, is what banks and funds pay to borrow money for one night. Well, this is usually stable and in line with the Fed's rate, but at the end of October, SOFR spiked massively above the Fed's rate, an unusual signal that big institutions suddenly needed cash and supply was tight. At the same time, the Fed's repo facility was hit for over $50 billion, confirming a real liquidity shortage. The squeeze was caused by several drains at once. With the government shutdown, the Treasury has built a near $1 trillion TGA buffer by pulling cash out of the banking system, and of course the ongoing quantitative tightening, which has already removed over $2 trillion in the past couple of years and depleted excess reserves. With liquidity tight, money is being pulled out of everywhere and ultimately stocks. Leveraged funds were forced to cut exposure. They sold the most liquid mega cap stocks. Not for fundamental reasons, but purely for liquidity reasons. Stocks like Nvidia, Microsoft, Amazon. Just look at the charts, they all drop at the same time. This helped cause sharp drops in these mega cap stocks and on the overall indexes. But historically, when liquidity returns, these same mega cap stocks rebound first, making such pullbacks strong entry opportunities. Now, this is just my opinion. It's backed by real data, but still just an opinion and certainly not financial advice. But what do you think? Drop a comment below and let me know your thoughts on the current market situation. Do you think the current drop is the start of a market crash, or will this be a huge opportunity? Let me know in the comments. Remember to like and subscribe if you enjoyed the video, and I'll catch you in the next